right? Perfect. We had a great response on the water webinar that we did last week, right? I think one feedback we got was that it was too short, right? There were lots of topics, and I believe Abhirup could just pick up about half of those topics, like some of us, half of those questions. Some of those questions we responded over email, etc. as well, right? So today also because the calendar says that 1 hour, so we will not delay more than that. But if there is a spillover, we're also open to hosting another follow up on this topic, right? Because this is one of the most important topic when it comes to BRSR or sustainability in general, right? So awesome. So today we have Olivia Paul with us. Olivia is a member of our team. She's amazing. She's a she's an ESG project manager with us, and she specializes in ESG reporting and strategy. She holds an MBA from XIMB and has previously worked with one of the big four firms, and has worked across multiple industries. And before I hand it over to her, I'd also like to introduce Oren. So we're an end-to-end ESG company. There are two key pillars to our business. The first one being our technology platform, which we call the Oren Sustainability Hub, and the second is we have a whole suite of services as well, right? Again, like EcoVadis support, CDP, sustainable supply chain, ESG training, etc. The whole lot, right? So that's about us. I'll now hand it over to Olivia. She has a very meaty session planned for everyone.
Thank you. Thank you so much, Arushi. So, hello everyone. A very warm welcome and thank you so much for joining. We'll start with the session. Just a minute. Yeah, yeah. So we've already done our introductions. Now let's begin and understand what we are looking at in this webinar for an hour. So today we are focusing on energy and emissions, and we are going to look at the core BRSR requirements for energy and emission. We are focusing on principle 6. We are going to learn about GHG inventory and a little bit on GHG accounting. We are going to look into scope 1, 2, and 3 emissions. We are going to explore some key concepts with respect to energy and emissions, which is GHG inventory. We are going to look at emission factors, emission sources, how are we calculating emissions from energy data, how are we calculating energy data, carbon footprint. We are going to explore a little bit on net zero and some more related topics. Finally, we are going to conclude by understanding how is BRSR energy and emissions data audited and what is the assurance process. So moving ahead, starting with understanding the energy indicators, energy indicator under BRSR. So BRSR talks about energy in its principle 6, and it mainly asks for two disclosures, which is your energy consumption and your energy intensity. So energy consumption is bifurcated under different sources, your renewable and non-renewable, and we have to account for 2 years, your current year and your previous year. And we are and we disclose the energy in terms of joules and multiples. The approach for data collection of the energy data is either you can have fuel records, which are basically your bills and receipts. You can have electricity bills. There is also internal records, which is followed in a lot of companies. Your logbooks, your meter readings, internal challans. All these are ways of getting your energy data. Now let's go a little bit deeper into what is asked in BRSR with respect to energy. So the two main sources are your renewable and non-renewable. So under renewable, you will have renewable fuel consumption, and renewable electricity consumption. And under non-renewable, you will have fuel consumption and non-renewable electricity consumption. So when you're talking about renewable, what the different sources of renewable fuel consumption would be your biofuels, if you're using biodiesel, biomass, briquettes, biobriquettes, biogas, all these come under renewable fuel consumption. When you're talking about renewable electricity consumption, it is your solar, wind, and if you are using hydro, that is all will come under your renewable electricity consumption. For your non-renewable fuel consumption, there's diesel, there's petrol, there's LPG, there's coal, um, natural gas, and different. So these are the sources for your non-renewable fuel consumption. And talking about non-renewable electricity, the main source is our grid electricity, which we get or purchase. So the second thing which comes under energy is your energy intensity. That also is essentially required, mandatory, required to disclose under BRSR. There are mainly three categories, which is per rupee turnover. That is calculated by your total energy consumption, inclusive of your renewable and non-renewable, divided by your turnover in the current financial year. The second is your PPP adjusted. That is your total energy consumed divided by the revenue. This only is applicable if you have businesses outside India. If you do not have any businesses outside India, then this is not applicable for you. You can skip this. Then the third one is in energy intensity per physical output. This is also optional, and here basically you are calculating it by total energy consumption divided by your either it can be your total production, full-time employees, or your total area per square meter. So these are the two main things which has been asked in BRSR in the energy section. Moving on, this is a simple calculation which I have kept for everyone, for all of us to understand how do we calculate energy. So we've got the data. This is our activity data. So the scenario is fuel in DG sets, your diesel generators. So if you're using 500 liters of diesel, for example, this is an example. If you're using 500 liters of diesel, so liters is in volume, and we need to get it. We need to get the mass value. So we have to uh, uh, the density. We have to multiply it with the density to get our mass value for diesel. So as per IPCC, it is 0.84. So we multiply that, we get it in mass, which is 420 kg. Now we are going to use the calorific value. We've used DEFRA here, which is 43,000 kilojoules per kg. We're going to multiply that, and we get the energy from 500 liters of diesel in joules, which is 18.06 megajoules. That huge value in joules I've converted to megajoules. You can have in different multitudes of joules as well. The second scenario is electricity consumption. For example, if you are having an electricity consumption, you can get in your electricity bills easily. That is very easily, so we can get that. So, for example, if you're having 200 kilowatt hour of electricity consumption, the simple calculation is we multiply it by 3.6 and 10 to the power 6 to get it in joules, and we can convert it to megajoules, gigajoules, terajoules as per your convenience. Sometimes here what happens, we get electricity in kVAh. That is also fine. We get it in kVAh. So there what we do, we multiply with a factor which is power factor, which is also available in your bills. In your electricity bills, it's there, power factor number. So we multiply that, we get the value in kVH, and then finally we multiply it with the conversion, and we get it in joules. Because energy is always calculated in joules, so in BRSR, it's all these category rules. So that is why we've converted that. Moving on. So now let's come to emissions. So emissions is also comes in principle 6. So when we're talking about emissions, we're talking about greenhouse gas emissions. So greenhouse gas emissions as per GHG protocol, IPCC, and every authentic GHG website, there are 6 main gases, which is carbon dioxide, nitrous oxide, HFCs, PFCs, and NF3. These are the 6 main gases which we are looking for when we're talking about greenhouse gases emission. So now let's categorize our emissions under scopes. We have scope 1 emission, scope 2 emission, and scope 3 emissions. As for BRSR, it is told to disclose in metric tons of CO2 equivalent. You can have it in kg as well. That is not an issue. So scope 1 and 2 is essential indicator, which basically means it is mandatory to report. Scope 3 is a leadership indicator. So for companies who have initially started disclosing, they can go for scope 1 and 2, and scope 3 they can eventually migrate into. Then again, there's emission intensity under this section. Approach for data collection is that if you have direct fuel records, fuel purchase records, your invoices, all those things, you can collect those and get your value. Electricity bills, meter reading from any equipment, boiler, furnace. Then refrigerant refill records. This is also one more aspect. So this comes under fugitive emission, which I'm going to cover in the next slide. So refrigerant refill records are also required, which will come under your scope 1. Moving ahead, just giving a brief overview of what is scope 1, scope 2, and scope 3. So scope 1 is our direct emissions. Whatever is under the company's control, under the company's boundary, they have the influence over those emissions, over those energy points. That is scope 1. Scope 2 is our indirect emissions, basically from purchase electricity. If you're purchasing electricity, if you're purchasing steam, purchasing cooling is something which is not happening in India, but in abroad. So that also comes under your scope 2. And scope 3 is something which is all of your indirect emissions coming from your value chain. I'll get into that in the next slide. But talking about 1 and 2 here. So in scope 1, we have mainly 4 categories. We have stationary, we have mobile, we have fugitive, and we have process. So in stationary, we are talking about energy and emissions from equipments which are stationary to your locality. Like you cannot move them. So it's say for boilers, say for furnace, say for DG sets. All those things are in your locality, in your inventory, and they are at station, like they are not moving. So that is stationary. So all those things come under stationary. Mobile is basically your transport emissions, uh, either from logistics or transportation distribution. All those come from mobile. Fugitive is something which is any leaks from your refrigerants, or when you are refilling your fire extinguishers, CO2 fire extinguishers or HFC fire extinguishers. So when you are refilling that, you are releasing carbon dioxide in the atmosphere. So the refilling amount accounts in the fugitive emission. And whatever is the leak happening from your refrigerant also comes under fugitive. Then the fourth one finally is your process emissions. This is a very sector specific thing. It is not applicable for all. Process emission mainly comes for your cement industry or your aluminum or steel industry, where where there is emission in the process. Like while you are while there is a production of that product, whatever is the emission in the process, that is called your process emission. So, and it's very sector specific. For, say, for example, IT or banks, that is not included. So you can skip that. So calculation is very simple. You will get the fuel quantity or the activity data. You will multiply it with the emission factor, uh, usually from DEFRA and IPCC or GHG protocol, because these are the renowned emission factors easily available in the public domain, and these are very certified. So these are the emission factors which we refer to, and you will get your emissions. The second one is the purchase electricity from the scope 2, which is your emissions from your grid purchase electricity. Here, you will get it from your electricity bills. You will get the data, and to calculate it, as I said, the electricity value either in kWh. If you have it in kWh, you can directly multiply it with the emission factor, which is for India, it's taken from CEA, which is currently 0.72. It keeps on changing. So recently it's 0.72. So you have to multiply that, and you will get the emission for your scope 2 accounting. So this was the main gist for scope 1 and 2. Moving on to scope 3. So here in scope 3, we have a lot of categories. We have, and this is your emissions from your entire value chain. We are looking at the entire value chain here. And this all the emissions which cannot be classified in scope 1 and 2 comes under scope 3. The main bifurcation is upstream and downstream. Upstream has these 7 categories, which is purchase goods and services, capital goods, fuel and energy related data, not in scope 1 and 2. 4 is upstream transportation distribution, 5 is waste generated in operations, 6 is business travel, 7 is employee commuting. So I'll just give an overview of what is upstream emissions. Basically, your emissions which the emissions which are occurring before the product reaches your factory, those are your upstream emissions. And when your product is finished and goes out of your factory, that is your downstream emissions. And this is how we have classified, this is how the classification is done. Different categories under these. Just giving an overview that for purchase goods and services, these are basically your emissions from your purchase raw materials, goods and services. Capital goods will be your emissions from your fixed assets, your building materials, your equipments which are purchased. All these things will come under your capital goods. Fuel and energy related emissions, which are not in scope 1 and 2, will come here. Upstream transportation and distribution. This is your all transportation transportation for the all the transportation when the raw material goes to the factory. All those transportation distribution T&D losses. This also accounts for your electricity T&D losses. All those things come under here. Business travel is your all these emissions related to business travels. Employee commuting is all the emissions from daily commutes of your employees to the office and back. That is your employee commuting. And then in downstream, you have transportation distribution. When the product leaves the factory, all the transportation and distribution there. Processing of sold products, use of sold products, end of life treatment covers your after the product is done. What are the emissions there? Leased assets, if you have any, that then it comes. All these categories are very specific to your organization. If it is applicable to you, then you are supposed to report on it. Otherwise, you can skip it. So there is the first step when we do scope 3 calculations. First, we identify which categories are relevant to us. So we do a sector specific analysis. We see which all categories come under our purview, and then we do a multi-criteria analysis where we look at different factors. We see if it is applicable to us, then only we go ahead with disclosing it. So this was the scope 3. Moving on. So I've kept a slide on GHG inventory. So GHG inventory is the very basic step when you start with managing your emissions. You start with your GHG inventorization. So the steps as per GHG protocol is that we first define our organizational boundary. The second or the side by side thing is operational. We start with the we continue with the operational boundaries. Then we define our emission sources. Then we collect our activity data. Then we select relevant and authentic emission factors. Then we do our emission calculation. Finally, we consolidate it across multiple facilities. We consolidate the data and we disclose it. So the first step is defining your organizational boundary. So what do you mean by organizational boundary? Organizational boundary means that we select the companies, subsidiaries, and the downstream facilities which come under our purview, which one to include in the inventory. If, say, for example, one MNC wants to only consider its emissions in its national boundary. So it will consider only the emissions which are currently being produced in the facilities in India, because that is the national boundary they have defined. After you do that, you select your consolidation approach. Either it will be an equity share approach or a control approach. I'll go into that in the next slide. So alongside this, we also define our operational boundary. Basically, we determine or identify the emission sources which we are going to include in our inventory, and we classify them in scope 1, 2, and 3 emissions. That is how we start with the operational boundary. After selecting the different emission sources and classifying them, we start measuring and reporting it. So for the organizational boundary, I'll continue with that. As I mentioned, there are two approaches. There's control approach and there's equity share approach. When we're talking about control approach, we're talking about our control over that business. So if we have the authority to implement any operating policies or any changes in the site level management, then we will go for operational control. However, if we have the authority to implement any financial related policies or any like if we are able to do implement any financial control, so we will go for financial control. And here we account for 100% of the emissions. Unlike equity share, where which I'll talk about, but here you have to account for 100% of the emissions, and it is irrespective of your equity share in the company. But the second type of approach is equity share approach. Here you are accounting only for your equity share in the company. Say, for example, you have 75 of equity share at ABC, so you will account for only 75% of emissions at ABC. That is how these two are differentiated, and depends on your control that you which control you're going to select. But if you have equity share in that organization, then you're going to select your equity share approach and accordingly calculate your emissions. Moving on. So in your operational boundary, now you have selected which all sources of emissions are there, and you have defined your emission sources. Now, what are you going to do next? You have selected your emission sources. These are the activity or places from which I am having emissions. Now we're going to categorize them in scope 1, 2, and 3. And also, there's before this, how are you going to identify those emission sources? So emission sources are anything, any activity or any source where there is energy consumption. So emissions comes from energy usage, right? So wherever there's energy consumption, electricity consumption is emission. If you are using DG sets, that's emission. So any energy consumption source is your emission source. Then the second thing to notice is any greenhouse gas involved in the process. Like I mentioned, like the fire extinguishers, there's carbon dioxide in it. So when you're releasing it, you're releasing carbon dioxide. So any GHG which comes in the process, that also is a emission source. Then the third, finally, if you're not able to identify any source, you can do a peer analysis. You can look at sector specific guidelines and see what all sources of emissions are there in your pertinent industry. So accordingly, you can identify and measure those sources. So moving ahead, now you have found out your sources. Now what are you going to do? You have sources, you have the activity data. Now you are going to use the emission factor to convert those activity data to emissions. And what are emission factors? Emission factors are basically a factor which converts your energy unit to emission units in simple terms. And it is usually expressed in kilograms or tons CO2 equivalent. The main sources for emission factors for India, which we use for purchase electricity, is CEA, which is Central Electricity Authority, and there are international sources which I was mentioning, DEFRA, IPCC guidelines, GHG protocol. All these are very authentic sources to get your emission factors, and these are the these are the ones which are approved by BRSR as well. Right. So moving ahead, I have kept one example just to understand what all I have been talking about. So let's take a scenario. There's a DG set which consumes 500 liters of diesel in that particular month, or in that particular month. So the emission factor which I have taken here from DEFRA is 2.66 kg CO2e per liter. So we are going to multiply that, and we are going to get our emission for diesel in kg CO2 equivalent. We just multiplied it with the emission factor, and we got our emissions in kg CO2 equivalent. Now, say for example, we have a company generates 10,000 kilowatt hour of solar electricity. Now, what are the emissions from that? So the answer is we will not have any emissions because it is a renewable energy and it has no emissions. So there's zero emissions there. Then the third kind of scenario is that you have a 50,000 kilowatt hour of purchased grid electricity. Now, as I mentioned earlier also, we mainly use our emission factor from CEA, which is 0.72. We multiply it with your so here the quantity was 50,000 kilowatt hour. So we need to convert it to megawatt hour because our value is in 0.72 kg CO2 equivalent per megawatt hour. So we'll convert it to megawatt hour. So that got into 50 into 0.72, which is 36 tons of CO2 equivalent. That is your emissions from your grid list. So this is a very basic understanding and basic calculation, how we are calculating our emissions, how we calculate our energy, how we calculate our emissions. Now moving ahead. Now I've put a slide on net zero. So a lot of you must have heard about net zero. So everyone is having net zero goals and targets, net zero roadmap, decarbonization strategy. All these things are kind of a very buzzword which is going around for a couple of years now. So it started off before Paris Agreement, but in Paris Agreement it got a foundation, and people started noticing that yes, we need to reduce our emissions, we need to account for it, we need to set targets, because until unless we're setting targets, we are not working towards it. Because when you're setting targets, you are measuring your progress over targets. You are then building and actually coming to attain those targets. So that is how an important net zero targets are. And mostly all the companies are setting their net zero targets. So processes to do that is pretty much detailed. First, you have to, of course, start with GHG inventory. You need to account and measure for your emissions. Then you have to do a baseline calculation. Then there's extrapolation for your emissions, which are going to go up in the years, and then you're finally coming down to zero. And how are you going to come down to zero? All these things are the steps to get into your net zero target. So also India has committed to reach net zero by 2050, 2070, which is a goal which we are looking forward to. That is what India has taken. Europe has taken for 2050, which is great, and EU countries are doing a lot with respect to their net zero goals and targets. So a lot of things are going around in those areas, and at company level also, because globally and nationally people are looking at net zero targets. So companies and enterprises are also having net zero targets for themselves as their decarbonization strategy, and to showcase themselves at a better position, um, aligning them with different standards. So moving ahead, here I have put a slide on energy data audit, and we'll have assurance in the next slide. So these are few recognized standards for your energy audit, which is specifically to energy, which is ISA 3000 revised. These are the assurance standards which give you proper methodology and how you are supposed to audit your energy data. There is also energy management system, which is ISO 5001, which has a clear description of your energy and its management system. For emission specifically, you have ISAE 3410 series. ISAE 3410, which specifically talks about scope 1, 2, and 3. Then you have ISO 14064 series, which again talks about your emissions. Um, these are all proper guidelines, proper standards for your energy audit, which you can refer to authenticate, verify your energy data. Finally, for assurance, so after your data is audited, you can go for assurance, which is also mandatory for BRSR. Currently, it is just for top 250 companies, listed companies. But as the year processes, the number is going to increase. So for assurance, you can go for any independent party. If you have no conflict of interest, you can go for that. There is no such like a specified list of entities which can give you assurance. Anyone who has the subject matter expertise and is competent can give you an assurance. It doesn't have to be any specific company. If they do have the technical expertise, they can give you assurance specifically for energy, for environmental data. So that is, they can do that. Any accounting firm can also give you an assurance on the data, which is disclosed in your report. So yeah, so this is the entire PPT which I had planned out for everyone. So this is the entire thing. Just let's do one small summary. So here we looked at BRSR Principle 6. We covered we covered energy indicators, what are the different sources of energy, what is required, which is mandatory to report, energy intensity, the different three categories. Then we looked at GHG emissions. We looked at scope 1, 2, and 3. How is energy calculated? How is emission calculated? We looked at emission intensity as well. Then we went into GHG inventorization. We saw the different steps for GHG inventory, how it is to be done. We also saw one example, couple of examples in that area. Then we talked about net zero and how it is, how important it is at this moment. How decarbonization strategy is the next goal for most of the companies in India and abroad. It is a huge thing, and I think all of us, all of the companies need to set their goals, targets, because I believe if you're not having anything like a target set, it is uh, your how are you going to measure your progress basically over the years. So I think that's really important. And finally we talked about our standards, specific standards for energy and emission audit data. So yeah, so I think we are mostly done. Are we in time? I think we are on time.
Hey, Olivia. Yes, so we have about 20 minutes to go and we have a lot of questions. So Rasadul and I have been on the side responding to a few, right? But I'll kind of, we can just start picking up some of these. I was just in the middle of typing one. So Olivia, there's a question and I can also, I'll maybe start by answering what I was typing and you can take over then. So someone asked that for value chain partners, does the entity only have to disclose consolidated data, or do they have to report for each value chain partner? And if consolidated data is to be reported, how is the integrity ensured? Right. So Olivia, I'll
Sorry,
quickly
Aditya,
start.
I think
Is my network bad? I'm so sorry.
uh, hello. Actually, I
Yeah,
think I
hi.
lost you. I couldn't hear you.
Yeah, I think my network was bad. Am I back now?
Yeah,
Perfect, perfect. Okay, awesome. I'm so sorry. So, Olivia, there was a question in the chat, which says, for value chain partners,
yeah.
does the entity only have to disclose consolidated data, or do they have to report on each value chain partner? And if consolidated data is to be reported, then how is the integrity ensured? Right. So I can quickly start by responding, and Olivia would love to hear your thoughts as well. So I believe this is in the case of scope three, right? And say, for example, if you are reporting on scope three, category one, which is your purchase goods and service, right? The ideal output will be consolidated data, right? You will ideally publish that, okay, this is the total number of my purchase goods and service emissions, purchase goods and service emissions in ton CO2e, right? The reason why consolidated data and not the entire just breakdown is that number one, it's really hard to get this information, right? Like if you kind of go through your entire list of purchase goods and service for even small organization that sometimes runs in 80,000, 1 lakh of line items, right? It's almost impossible to kind of get all of that data in the first place, right? Secondly, even if you have this intent, right? Like we've implemented multiple supply chain sustainability programs, right? Your value chain partner would not be, doesn't have the bandwidth to provide that broken down data to you, right? So lots of times what companies do is like a mixed method wherein for certain suppliers, like maybe their raw material suppliers, they will publish the actual data, and for the others they might kind of do like a spend based methodology. But yeah, the outcome is the consolidated information, right? And again, right, like I mean, you think about it, it's like in the sustainability report will just become too much, right? That while the integrity is maybe, or you don't have the accurate data, right? But you do have the complete data, and that's what is important. Olivia, would love to hear your thoughts as well.
Yeah, I totally agree with you on that. Like a consolidated approach is definitely what we should go for rather
Yeah.
than having all the suppliers' uh, data. So yeah, so that is like you may basically explained it also. I think that's answered.
Perfect, perfect. Olivia, another one. Parul asks that could you, and again, I know going into detail will be quite hectic, but could you very briefly explain to us, what the scope 1, scope 2, scope 3 for a financial bank branch would be, right? And Parul, we need some clarification. Do you mean this, do you want us to only do this thinking for a branch or for the entire bank when we think about our calculation?
Got it. So for when you're talking about banks or financial sectors, so in scope one, you what will you have? You will have electricity. Oh, sorry, you will not have electricity. Electricity will come in scope two. In scope one, you will have your DG sets, which is used for backup. Then you will have actually the scope is very limited in banking. Mainly, you will have your diesel consumption in DG sets, and yeah, your fugitive emissions from the fire extinguishers, if and your refrigerants if you have any. Those fugitive emissions will come into place, and your stationary emission will come. Scope 2 may you will have purchase electricity, and scope 3 may whatever is relevant to you, and you have the data for it. Mainly, what we do in scope 3, we when we're starting, we go for purchase goods and services, because that is something we will have the data for. We go for capital goods and employee commuting and business travel. This is what we take in upstream when we are starting with scope 3 emissions. Then we go into depth as the company matures.
Got it. And scope 3 also, I think, did you want to also maybe, Parul, is that enough, or do you want us to go deeper on certain elements? We'll move on to the next question. If Parul comes back, we'll pick it up again. So there's another question for us, Olivia, that how do you calculate emissions when we are working in a co-working space? Right. And again, I can pick this up. So, and Olivia would love to hear your thoughts after that. So, if you're working out of a co-working space, the emissions from that feature in your scope 3 upstream leased assets, right? That is where it is kind of captured. And secondly, the only way to do this is you will have to ask your co-working partner to give it to you, right? One of our customers, Modify, they're a fintech company, global operations, but almost all of they're headquartered in Berlin, but almost all of the other locations they have employees sitting out of co-working spaces, right? So, but for that, the way we calculated was that we reached out to their co-working partners, right? And those guys had their scope 1, scope 2 for the entire building, right? Then the math they did was fine, entire building. Then how many seats Modify employees occupy divided by the total number of seats that were available, and that's how we kind of got that number. So ideally, they'll give you that number directly. That's like the only way, because you don't know how much how much diesel is being consumed. You don't know how much electricity is being consumed. There's no good way to estimate it as well.
Sounds good, yeah.
Yeah. Amazing. Awesome. Would you know this, Olivia, that do we need to minus emissions saved by electricity produced by solar from grid, from like a scope 2? There's no minus that happens, right? No.
No. So when you're having a great, if you're having solar, there will not be any emissions. So you don't need to minus it.
Yeah. So on, there will be no minus. You just kind of calculate that as zero emissions in your scope 2, right? So
Yeah.
you will only consider your grid electricity if there is anything. Awesome. Okay, I
I
am going
think
to start.
I see a question here.
Yeah.
Sai has asked to explain the control approach. Okay. So just to keep it very simple. So as I mentioned, when we're doing the JJ inventory, the first step is to define your organization boundary. And
Yeah.
yeah,
Olivia, we lost you. Could you repeat? Yeah.
yeah, sorry, I was getting a call. Sorry. Yeah. What I was saying is that Under organizational boundary, when you're defining your organization boundary, there are two approaches, as I said, equity share approach and control approach. So when you're talking about control approach, you're looking at the control over your business operations. So in that, you have two categories. There's operational control approach and financial control approach. So if you have the authority to make any operational related policy changes, or you have authority uh, to implement any site level changes which are operational to the company, then you will go for operational control approach. However, if you have financial control over that organization, then you will go for financial control approach. That is the basic gist. So whatever it depends on your authority to, if it is operational or financial, you will go for either. So yeah, that's just that.
Got
I
it.
hope that
Well,
answers. Yeah.
another question. So Tanuja asks that as a regulatory compliance service provider, what are our scope one, scope two, scope three, right? So this would kind of act like a service sector scenario, right? Like the business doesn't matter, but yeah, could you tell us that for Tanuja, what would for them as a regulatory compliance service provider, right? Scope one, scope two, scope three.
Sorry, could you just repeat it?
Yeah. As a regulatory compliance service provider,
Okay.
what is an organization's scope one, scope two, and scope three?
As a regulatory compliance service
Service pro
provider.
So it'll be a service provider, right? I think the regulatory compliance thing is something we can put aside. It would act like any kind of service provider, right? So again, just could you walk
Yeah.
us through scope one? And again, happy to help in case you need me to, but yeah.
Yeah. So the scope one would again include um, in a service. So it will have
DG sets again, right?
DG
Same
sets,
as
of
the
course.
banking
Yeah, it will
example that
have
we did
DG
for
sets.
Parul, right? Yeah.
Then it will have all the company-owned vehicles emissions from that. Uh, that will come under scope one. Uh, your fugitive emissions, your leaks in refrigerant, the fire extinguishers, it will come in fugitive. And scope two will be your purchase electricity. Scope three, whatever is relevant to you. For a service sector, it would be, I think, mainly the upstream categories for them. So that's it. Purchase goods and services, capital goods, employee commuting, business travels. Um, yeah, yeah, that's it. And if you have any leased assets, or you have any franchisee or investments, then also you can account for that. Depends on what are there.
Got it. Thank you. Olivia, there's another question by Jay Shah. Jay asks that given that different regulations and frameworks require different GHG metrics, for example, for the shipping industry, it is IMO and EU ETS focus on CO2, while fuel, EU maritime, and many ESG frameworks require CO2E, right? I think we were talking about the CO2, CO2E thing in the morning, right?
Yeah.
So do you want to touch upon what is CO2 and CO2E, right? And then Jai also asked that how should organizations plan their GHG emissions inventory over time to account for these inconsistencies in reporting requirement, right? Some require CO2, some require CO2E, right? And again, do you see GHG reporting metrics being harmonized in the future, or should companies maintain dual inventories, right? So yeah.
Okay, so to first answer what is the difference between CO2 and CO2E. So when we are talking about CO2, that is your emissions with respect to CO2, your carbon dioxide emissions. When you're saying CO2E, you're including all the GHG emissions, which are your N2O, CH4, everything as an equivalent to carbon dioxide. That there's a concept of GWP, that is global warming potential. So when you're including all those all the factors for different GHG gases, when you're saying that we are going to disclose in terms of CO2, carbon dioxide equivalent, you are basically keeping all the GHG gases in terms of carbon dioxide equivalent. So that is how it is done.
Got it. Perfect. There is another question that I was just responding to that this is by an anonymous attendee. They asked that the obligated, remember you were talking about that value chain question. I think it's a continuation from there. The obligated entity must be providing the list of their value chain partner data or how they are collecting the data and their factors, etc., to the assurance provider for assurance, right? I think I'll take this question. So yes, right, like while in a sustainability report you don't need to go very deep that okay, this is the emission from my from this vendor, this is the emission from that vendor, and you'll have like a consolidated purchase goods and service number, a consolidated capital goods number. But in the back end you have to maintain repository of how you arrived at that. You know, when you do go through an assurance process, when your assurance partner will ask you for how did you arrive at this final number of purchase goods and service, right? They will look at the emission factors you have used, they will look at the methodology you've used, and the key activity data that you've used as well. So while there is no need for you to publish that explicitly in your sustainability report, you should definitely maintain it in the backend. So yeah. Awesome. Any further questions? I think there were a couple more in the chat. Okay. Snehalata also asked a question that should the solar power emission factor be 0.04 or 0?
Solar power emission factor.
Yeah, should be 0.
Yeah.
Yeah, it should be 0. Amazing.
I see one question here. How are you going to calculate emissions from employee commuting, which is one of the categories in scope T, comes under upstream. So when you're talking about employee commuting, what we look into is we get the employee data, we ask them the mode of transport, either it is your two-wheeler, two-wheeler, four-wheeler, taxi, cab, auto, bus, train. We get the mode of transport. We get if you have the fuel which is used, that also we can use, or else if you have the spend, the INR spend, that also we can use. It can be fuel or it can be spend. So we get that. We get the emission factor from either DEFRA or GHG protocol IPCC, and we calculate it. So basically, you need to have your employee details. You need to have your mode of transportation details, either fuel or spend data. Then you're going to calculate emission.
Got it. Another question is that emissions from the vendors are to be calculated based on the vendor's total emissions or on the emissions generated per unit for the goods and service purchased, right? And Olivia, I can take this, right? So Ranjana, for ease of calculation, right? How this is typically done is that you will ask your vendor that you'll get your vendor's total scope 1, scope 2 emissions, right? Then say you are 10% of their business, right? What that means is that out of the entire revenue that they're generating in the financial year, 10% of that revenue is attributed to you, right? So then 10% of their scope 1 and scope 2 will be attributed to you, right? That's a very simple way of calculating, right? Because I think calculating it per unit goods and service purchase, etc., becomes extremely complex, right? Sometimes vendors do not have that segregation because the same machinery is used sometimes, right? So it's hard to break up. So this should really help you do this easily. Amazing. We have 1 minute to go, and again, there are lots of questions that we missed out, right? It would be great that if you could just kind of send us an email with these questions, and we'll do our very best to revert to you, right? You already have Rasadul's email ID. It's the one from where you've been getting all of those reminder emails, and again. Happy to share my email ID as well. And Rastul and I will connect you with Olivia or with Abhiroop in case there are any specific questions and you might want to get onto a phone call with us to understand stuff. We're really happy to do all of that, right? But thank you so much for coming in today and spending your Friday evening with us. And thank you so much, Olivia. This was amazing. We learned a lot, right? I think. We just Rasadul might send out a poll later or now. I don't know what he has planned, but we also want to hear from you if you'd like us to do a scope 3 specific um,
Session.
session as well. We're very happy to do that also because scope 3 is a very technical topic,
We can
right?
we can do the poll right now.
Perfect, Rasadul. Could you launch
Yeah.
that for us?
So if you see on your screen, there will be a question. We organize a dedicated workshop on scope 3 emission calculation. There are two options, yes or no. You can choose according to that. Yes, more than 50% have already participation of us selected yes. So I think
Okay,
people are
amazing.
excited. Yeah.
Yeah, amazing. So perfect. You will hear from us on the date, time, etc. on this, right? In case there are any other topics, please write to us. Oh, 100% say yes. Oh my God. This is amazing. Awesome. So in case there are any other topics as well, which probably are not on our radar, but you'd like us to talk about, let us know. We're more than happy to organize. We love having these conversations. But that being said, thank you so much, everyone. This was a pleasure. All right. And yeah, hope to see you next Friday. Have a great weekend.
That's great. Have a great
Thank
weekend, everyone.
you.
Thank you.
Bye.
Bye.